All right, my name's Dan Warwood, and I'll be doing this week's homework tutorial. We're going to be looking at 4-5, which is what was assigned. So it's it's not too difficult. It just helps to break it down into smaller pieces just to kind of get a better idea of what's going on. So it starts off saying, in its first year of operations, Crane Company recognized $31,700 in service revenue. 7,700 of it, which was on account and still outstanding at year end. The remaining 24,000 was received in cash from customers. Then it goes on to say the company incurred operating expenses of $16,600. Of these expenses, $12,690 were paid in cash. $3,910 was still owed on account at year end. In addition, Crane prepaid $3,260 for insurance coverage that would not be used until the second year of operations. So it says calculate the first year's net earning under the cash basis of accounting and the first year's net earning under the accrual basis of accounting. So it wants us to get the cash basis and then accrual basis. So what I went ahead and jotted down a few different categories based on the different things I saw here. So the first thing it says, they had $31,700 in revenue, and then it breaks it up further with $7,700 of which was on account. So since they're receiving that, that's their aged receivables since it's on account. So I'm going to go ahead and put in 7,700 there. And then it says the remaining 24,000 was received in cash from customers. So they have already received $24,000 in cash. Then the next line, if we take a look, the expenses that they incurred ran a total of $16,600. They broke it out into what they had already paid and what was still owed. So the amount that they had already paid was this $12,690. So if we come down here and we do the $12,690, which they paid in cash, but they still owe $3,910 of the $16,600. So that's their aged payables, which would be $3,910. Then finally it has this little tidbit saying Crane prepaid $3,260 for insurance coverage that would not be used until the second year of operations. So we remember the rules, right? So they gained an asset, which was $3,260, but they paid in cash, which is $3,260. And just so that I can keep these straight, we're going to make these bottom ones in negatives, considering this is cash going out rather than coming in. And since age payable is kind of counteracts with age receivables, we'll make that one negative as well. All right, so the first part of this, though, is they want us to calculate if it were on a cash basis. So if we're only looking at cash, that means we can't look at aged receivables, we can't look at prepaid insurance, we can't look at aged receivables, we can only look at cash going out. So that's going to be this one, and this one. So for that one, we can just do a simple sum. And I'm going to sum that one, and that one. And that tells us that if they were doing accounting based on a cash basis, just looking at cash coming in and going out, only logging the transactions or the revenue as they come in, coming out, that's what it would look like. Now, if we're doing it on an accrual basis, it's going to look a little bit different because we've got to factor in their aged receivables, any assets they have, and so forth. So this is what we're given. So rather than just summing the cash accounts, we can sum all of them. So let's do our aged receivables, our cash, our prepaid assurance. That's going to be canceled out by that one right there. But we can do these ones as well. And that leaves us with 15,100. So if we take a look at the assignment, cash basis 8,050 and 15,100 for the accrual basis. Yeah, those are the numbers we have. And then finally, it asks, which basis of accounting, cash or accrual, provides more useful information for decision makers? Well, it's funny, it's interesting. We could adjust these numbers to anything, really, and it's not going to affect this number here. So this really doesn't give us enough information about what's going on with all the accounts, where if we do an accrual basis, we have a better understanding what's going on with all the accounts that are linked to the company. And so that provides us a little bit better of an understanding with what's going on financially. Hopefully this helps. If you have any comments or questions, go ahead and post it in this thread, and we'll try to get those answered as a class. Thank you.